We trying to move on up like the Jeffersons.
Right. We teach 5 core strategies, which is minimizing your taxes. As a business owner and as a 9-to-5 worker, we help you understand how to fill out your W-4 correctly so you're not overpaying the taxes, because a lot of people, according to the IRS, billions of dollars was just given away to them. People are overpaying the taxes, so we teach you how to actually fill out that W-4 correctly so that you're bringing your income or your money back home. And we teach you how to understand how, as a business owner, how to take advantage of all your tax advantages that you can take advantage of. I'm also a tax professional, and yes, you might have someone doing your taxes, but no one should know your money better than you. Lafayette kept saying it, that do your research. So that is very important for you to do your research when it comes to your income, your money, your revenue. And we also teach you how to investment education, different avenues. So with credit, I find out when I sit down with people that the average person does not wake up and just say, I'm gonna have bad credit. A lot of times it's just the lack of cash flow. So we are the cash flow company where we teach you how to get to that cash flow. And through the credit program, I teach you how to not just repair your credit, but I'm going to teach you how to build it and maintain it. So you'll learn some things, because when you pay someone like me, and what made me love this program is because we actually educate you on how to do it yourself. When you pay someone like me to do it for you, it's a proven fact that you're going to need credit again within 2 years. Why? Because you didn't know what steps you took to get there in the first place, what you need to do to maintain the good credit. So I like educating and empowering people. I believe I have a saying, I say that if I teach you how to fish, you'll eat for a day. Or if I give you a fish, you'll eat for a day. But if I teach you how to fish, you'll eat for a lifetime. So applied knowledge is powerful. So if I teach you how to repair your own credit, you'll eat for a lifetime. Your generations will learn how to understand how you can pass the knowledge down to your children, okay? So this is just a couple of fun facts that I like to share. And I always say rescue yourself, because no one else is gonna come rescue. I don't care who is in the White House. I don't care who you vote for. I don't care what's going on. You have to put in the work when it comes to understanding your money and your finances, okay? So some fun facts is that 68 million people have poor credit. So that lets people know not to be ashamed. There's nothing to be ashamed of. Life happens. You mess your credit up. If you know what to do, you can build it right back up. So 68 million people have poor credit. 1 in 5 people have an error on their credit report. The average person will look at their credit report and say, oh, that's correct, because they see it up there, not knowing that they are reporting inaccurate information on your credit report. In 2018, the credit repair industry earned over $3 billion. So yes, it is a money-making opportunity. You get the knowledge, you can actually charge people. You can actually leverage your good credit to make money. 79% of people who dispute errors on their credit report are successful in removing them. You don't want to bury your head in the sand when it comes to your credit. You want to pull your credit reports. You can actually pull them every week now. They used to only allow you to pull them once a year, but you can go up there and pull your credit reports every week. It will not reduce your credit score. It won't take your score down, but you don't want to bury your head in the sand when it comes to your credit, because there are a lot of things that's being put on people's credit. Identity theft is happening right now as we speak. Every second, someone's identity is being stolen. To me, identity theft protection is just as important as life insurance. It's very important to have, and that's an investment that you can have and make for yourself. But with errors on your credit report, I'm one of those 79% people who actually disputed stuff off of my credit report, and I got effective results. I was able to delete over 10 items off of my credit report within 30 days, and my score went up 120 points. Looking at my credit report before I got the education, I just assumed it belonged to me. I had the Sprint account. Okay, Sprint was up there, but Sprint was up there twice. I just assumed it was up there because I owed the bill and I never turned in the phone. But what it was, they were reporting inaccurately. And because the account was inaccurate, meaning the date and all of that was incorrect, the amount they was trying to collect from me was incorrect, I was able to remove it off my credit report and not had to pay not one creditor. I didn't have to pay anyone because they were reporting inaccurately. Because of the importance credit plays, everyone wants good credit. Rescue yourself, okay? Here are some credit scores, and your score can actually go up to 900. But this is just giving you an idea of where credit falls now, but you actually can get a 900 credit score, okay? This gives you a place that you can go to get your credit report for free. Annualcreditreport.com. They let you pull your credit report for free once a week. Since COVID, they allow you to go up there once a week, and I encourage people to do that. Like I say, there's a lot of inaccurate things. I have found people saying that creditors from 2010, 2004 is popping up on their credit. So it's important for you to go there and pull your credit report. They give you your credit report for free. You actually can go to each individual credit bureau if you want to, their site, Experian, TransUnion, and Equifax. You can go and set up a free account on their sites, and you can know your credit report, and you can get your credit report and your credit score. But annualcreditreport.com will give it to you for free. MyFICO.com is the place where 90% of your lenders go to get your credit reports and your credit scores. You do have to pay for your credit scores from here, but this is where 90% of your lenders will go. It also will let you see your credit score for mortgage, because what the mortgage company sees is not what the car insurance people will look at. So it's multiple credit scores. So if you go to myfico.com, you can actually see your multiple credit scores. And it does cost. As business owners, we know we have to invest. Certain things we can write off on our taxes, okay? So here are some errors that may be on your credit report. Identity errors. How many people have ever pulled their credit report and seen multiple names, multiple addresses, multiple telephone numbers? Any time you ever pulled your credit report and any address that you've ever used might appear on your credit report, it is very important that you remove this. You want a clean credit report. I had a client one time, she had 27 addresses on her credit report. Anywhere she ever lived at or any address she's ever used. So when you pull your credit report, if you have multiple addresses on your credit report, you want to take that off. You want a clean, accurate credit report. You only want one name. If you've been married before or your name changed, however, sometimes two people can have the same name, different middle name, middle initial. If you are, my cousin, she's a female, but she's named after her mother. So because she's named after her mother, but she has a different middle initial, a lot of her mother's stuff keep appearing on her credit report. So you want to make sure that you don't have a lot of names on your credit report. I know Lafayette, he just left, but I've heard a banker tell me before, when they look on your credit report and they see a lot of names, they look at you as having multiple alias. Why are you applying for different things and different names? What type of, it looks suspect to them when they see multiple names on your credit report. Also, the old addresses on your credit report can attach you to the credit stuff that you're trying to dispute off your credit report. So you have collections, judgments, or any inaccuracy on your credit report, those old addresses is how those creditors will say, I can prove you owe the debt because you have the address on your credit report. So you want a clean identity, part of your personal identity. Account errors. Like I said, for my credit report on Sprint, they had up there the inaccurate date that I opened the account. They had up there the inaccurate amount that I owed on the account. So because of that inaccuracy, even though I owed it, I was able to dispute it and delete it. So according to the Fair Credit Reporting Act, and this is very important, according to the Fair Credit Reporting Act, it states anything that is inaccurate, outdated, or unverifiable must be removed. If they can't prove it, you don't have to pay the debt. They have to prove that you owe that. So if it's unverifiable, I've deleted a lot of things off of people's credit report, even if they owed the credit card bill. But because they was reporting inaccurately, because the third-party collection companies couldn't prove it. Once they sell the debt, you no longer owe that debt. They have to prove without a shadow of a doubt that you owe that debt. So that's very important, okay? Have anyone ever heard of secondary reporting agencies or bureaus? Okay. To me, it's very important for you to get your credit reports from them as well. LexisNexis, which is the largest secondary reporting agency, I tell everyone, go up there and pull your credit report. You'll be surprised of what you see. Have anyone ever received a letter from LexisNexis? Yeah. Yep. So if you ever went to the hospital or been declined anything, you received a letter from LexisNexis. So if you want to go there and pull your credit report. Freezing your secondary credit reporting agencies is a strategy that you can include with the disputing process. LexisNexis recently bought out SageStream, and Innovis and CoreLogic, they no longer allow you to do a freeze. But freezing your secondary reporting agency, what it does is just sometimes prevent, when you're in the dispute process, it just prevents the creditors from being able to access your credit profile from the secondary reporting agencies. So it's just a strategy of prolonging them from trying to get you to get these things off of your credit report, okay? So it's just a strategy that you can use to freeze your secondary reporting agencies. But LexisNexis is the main one, guys, that I want you to be able to pull, go and look at it, and put a freeze on that, okay? Putting a freeze on your secondary reporting agencies does not prevent you from getting approved for anything. I've had my freezes in place for over 14 years. The only thing that will prevent you from getting approved for something is when you freeze the main credit reporting agencies, TransUnion, Equifax, and Experian. But freezing the secondary reporting agency, LexisNexis, that will not prevent you from getting denied. You know, it won't get you denied, okay? So make sure you pull your... Go ahead.
Because LexisNexis normally does like identity verification and stuff like that too. So would that freeze prevent like background checks and stuff too?
Okay. No.
They also send out like confirmation receipts for payments and stuff too.
Yep. Yeah. So yeah, they won't. That would not decline you from getting approved for background checks for your jobs. Okay. So with our program, we help you to understand the whole credit score. And this is just taking a look at the whole credit score. When you're working on your credit, you want to consider all 5 factors. Payment history, which is the largest. That's credit utilization. Credit mix. The length of credit is very important because people will dispute items off of their credit report, not even considering the history, seasoned credit. That's very important when you're applying for something because it shows that you know that you've paid something off or that you're not a risk. So payment history is very important. New credit and amounts owed, okay? And here's a breakdown of what all of them mean. So everyone starts off at 300 points with their credit. You can build your credit up where you'll get a total of 550 points, and that helps you achieve a perfect credit score. So payment history accounts for 35% of your score. Credit utilization accounts for 33% of your score. The history and the length of credit is 15% of your score. New credit accounts is 10%, and credit mix is 10%. Okay? Credit utilization. Okay, so that counts for 30% of your score. So I heard Lafayette was talking about the credit cards. You want to make sure that you stay under 30%, but I tell people 10% is golden, even less than that. And it's hard if you get approved for a $300 credit card to stay under that, but it's not. Because I tell people, when you get approved for a credit card, you want to, if you get a paycheck, take your money, put it on the card or put it in the bank. Use your credit card. So instead of using your debit card and cash, because all you're going to do is take and pay the credit card off. As you pay that credit card off, they're going to re-increase your credit amount. So if you take and eliminate not using a debit card, most people who own banks don't have debit accounts. And like he said, savings account really, because the savings account, your money's not doing anything. But I have a friend, I don't have an 850 credit score. I'm at 7 something, but she stays at an 850. And when we was teaching the class, she was like, Tiniki, when you come up here and see me, what's the one thing you see I don't use? I don't use a debit card. I don't use a bank card. She has a bank for her mortgage and stuff, but she does not use a debit card. She uses her credit card for everything. That's building your utilization. You're taking the cash, paying the credit card off, and you're building your utilization. Do y'all understand that? Okay, so utilization is credit utilization, and I also let people know when they come to me for credit repair, you can't pay me to build your utilization. You're using your credit card. I'm very honest with people. And I'm very passionate about credit education. I would rather for you to get educated about the credit and do it yourself, because you can't pay someone the utilization part. That's something that you have to do when you use your credit card. This is how credit utilization works. So if you have a credit card limit and it measures the amount of credit you are using, for example, if your balance is $300 and your credit limit is $1,000, then your utilization is 30% of that, okay? I tell people, increase your credit limits if you find yourself always maxing out your cards or going over that 30%. You can ask for an increase. If you don't want to ask for an increase, then you just want to balance your money, better budgeting, lifestyle. Just, be aware of that so that you're not maxing out your credit cards. Okay. Have anyone ever heard of authorized user? Mm-hmm. Have anybody ever been an authorized user or used one? Okay. Yep. I used one when I was building my credit. So an authorized user, everybody knows what it is? Okay, good. Do y'all have y'all children? Anyone in here have their children or have had their child an authorized user? Yep.
I do my sister.
Yep. Yes, authorized user is a great tool for helping someone build their credit. And you can actually help your children graduate with a 750 credit score if you make them an authorized user on your card. I'm sorry about that. Thank you. Okay.
What's the age that they can start at? Is it an age?
What you say?
The age.
Oh, the age. I would say as young as 11, 13. Between 11 and 13, I would say you can make an authorized user. With an authorized user, they're not getting the card. So that's the great part. I've heard people say that the person received the card in the mail, but they shouldn't receive the card in the mail. So your children won't have access to the card. Story with me, my mom made me an authorized user on her JCPenney card when I was younger and told me I could go school shopping. When I got older and seen that bad debt on my credit, I was like, I ain't never had a JCPenney card. What in the world? And I thought about it. My mom had made me an authorized user. So I was like, Lord. And so, yeah, you can do it as young as, I want to say between 11 and 13. But it will help start building their credit for them. Seiko, when you did your sons, how old was he or your daughter? Your children, how old were they?
5 and 7.
5 to 7 years old? Okay, so you can do it as young as that age. Yep. So that's a great way for you to bless your children with good credit, okay? You just got to make sure you pay it on time. So this is installment credit. Installment credit is mortgages, auto loans, and student loans. Installment credit usually allows you to borrow a lump sum of money from a lender, and you pay that money back in fixed amounts or installments. That's installment credit. To maintain a good credit score, it's important to have both installment loans and revolving credit, but revolving credit tends to matter more than the other, okay? And this is revolving credit. Your credit cards, personal loan, and home equity line of credit, okay? So some ways to clean up your credit. Here are a few letters that you can send off to actually clean up your credit. You have the debt validation letter. That's the letter that I said that when you make them prove how you owe the debt. If they can't prove that you owe that debt, they have to remove it from your credit report, okay? So you want to send off the debt validation letter. You have the method of verification. So when you send that debt validation letter off, they might send you a letter in response with investigation of their response saying they either updated or verified their account. If it's verified, you want to send method of verification. How did you verify that I owe that debt? We don't want it from a third party collection company, we want to know, I need to see your actual contract. I want to see the contract where I came into your store with my John Hancock signature up there. If they can't verify that you owe that debt, it must be removed. Violation of FCRA rights. That is if they violate your Fair Credit Reporting Act rights. You can actually send that letter off in intent to litigate. That's where you take them to court. I've had clients who won lawsuits against TransUnion, Equifax, and Experian. They actually won lawsuits against other so-called credit agencies that said that they was repairing their credit and they didn't. So you can actually win lawsuits against the reporting agencies if they're not following the proper guidelines. Don't threaten to take a creditor to court if you know you owe that debt. I tell people that all the time. When people get judgments, that's not an actual lawyer taking you to court. They are probably paralegals with the company or whatever, and they'll take you to a back room. You never admit that you owe that debt right then. Make them prove how you owe the debt. Again, I've seen people agree to paying off something that was out of its time frame. And a lot of times they know the statutes of limitations, so that's why they'll call you up. During COVID, for hospital bills and stuff, Centera was granted billions of dollars to pay people hospital bills off. People were not picking the phone up because they thought that they was calling them about debts. They were granted billions to pay people hospital bills off. You want to, I always tell people, we don't tell people to duck your creditors or, don't pay your obligation. You can always eliminate something going on your credit if you just communicate. You can tell them that you can afford to pay $5 a month, $20 a month, but you can actually avoid it even hitting your credit report if you just communicate with the original creditor before they sell the debt. Hospital bills, anything over $500, they no longer report it to your credit report now. But even when you go to the emergency room or the hospital, it's a pamphlet at that desk that if you call that number on the back, it's a hardship letter. You can call the finance department and let them know you're having hardship, and you can actually get your hospital bill paid off, because there are billionaires that donate money to pay people hospital bills all the time. So that's a way to avoid hospital debt being on your credit report, okay? But these are some of the letters that we provide for you. Like Brian was saying, if you do need my assistance while you're in this co-op, I will provide you with the letters and stuff as well. So here are some solutions for paying down your credit or increasing your credit score. You can pay down the revolving debt, credit utilization, become an authorized user on someone's account if you need to increase your credit score. Someone in your family, auntie or granny, they might have an old Sears robots. They've been paying it on time. I had a girlfriend who blessed me with a trade line as an authorized user on her American Express account, $180,000. That I was already at like a 720, but I was trying to get a little higher, and she made me an authorized user on her account, and it just took my score up. So if you know someone who could make you an authorized user, just make sure they pay their bills, because it will affect your score as well, okay? And that is the end of my presentation. Is there any questions? I had a client who never used her Macy's card. I tell people, I don't like department store cards. If you can get approved for a major credit card, get that and pay for what you need. But she had a Macy's card. Stop using the Macy's card. So while we're working on her credit, I see that she had a Macy's card for over 15 years. Seasoned credit, perfect. Like you say, age of credit. Because she stopped using that Macy's card, and this is what a lot of department stores is doing. If you don't use that card, they're gonna shut you down. Yeah. And they closed her Macy's card down. And when I got a notification and I seen her score drop 100 and something points, I said, what happened? And she said, oh, I went to Macy's and they wanted me to purchase something and I didn't want to use my card, so I fussed them out and told them to close my account. I said, girl, that was seasoned credit history. So in that instance, when you close seasoned accounts like that, credit history, it does affect your score. And I just looked at somebody's credit report yesterday and it happened to them. They wasn't using their K-Jeweler account, and they closed their account and their score went down. Which they can build it back up. I told them what they needed to do to build it back up, but it does affect you in those instances. But it does not, because again, the way that it's reporting on your credit report that you see, they're probably just showing you a time frame, but I'm quite sure if you looked at the whole picture of your credit score, you will be able to see all those years of you having your home, because the date is up there. Yes.